Many factors that impacted the financial performance of U.S. property casualty insurers in 2020 are likely to continue in 2021. Here to discuss AM Best's annual review and preview special report on the PC industry are Michelle Baurkot and Jennifer Marshall, directors at AM Best. So, Michelle, the report notes that despite an enormous amount of catastrophe-related losses last year, the projected 2020 combined ratio shows just a slight deterioration. Could you explain that dynamic?
Thanks, Meg. The PC industry faced many challenges in 2020, and catastrophes were definitely high on the list. Hurricane losses, severe convective storms, and wildfires all set records in 2020. Cat losses totaled 7.5 points, up from 4.1 in 2019 for the total PC industry. So I guess to answer your question, how did the combined ratio still only modestly go up from 99.2 to 99.3? And I think we really need to look at the lines of business that are influencing these results. If we start with homeowners, here we definitely saw the most impact from the cat activity. The combined ratio is expected to increase up to 109.1, over 10 points from last year. If we take a look at personal auto, which represents the largest line based on net premium written, this showed a significant reduction in frequency. The drop in mileage from stay-at-home orders and more remote work really drove down accident frequency. We're expecting the combined ratio to be 94.4, which is down over 4 points from last year. Increased rates in earlier years and enhanced safety features also really contributed to the strong performance for this line. Commercial auto, while not to the same magnitude as personal auto, also showed a beneficial impact from lower frequency. And then workers' comp. Workers' comp also benefited from pandemic and the economic distress with remote work environment and also higher unemployment levels. So in this line, we saw over 2 points of improvement in the combined ratio. So the improved performance from the combination of personal auto, commercial auto, and workers' comp, which together make up more than half the industry in premium volume, offset the higher cat activity. Also, leading up to 2020, pricing in personal lines was definitely keeping pace with claim costs. So through enhanced underwriting, pricing analytics, and ongoing exposure management, we definitely saw that this helped to diminish the adverse impact of the cat losses for the year.
So Jennifer, the forecast in this report doesn't take into account the change in the legal environment for potential business interruption payouts. How big of an issue is this still for commercial lines insurers?
Thanks, Meg. We do still see this as potentially having a very big impact on commercial lines insurers. We noted last spring that legislation to mandate coverage for business interruption could have grave implications for the industry's viability. So far, none of the legislation has been adopted, and most court cases that have been brought challenging insurers' denial of claims have been dismissed without going to trial. But some cases are proceeding, and so the question really hasn't been answered definitively. We don't expect these issues to be resolved quickly either. The cases that proceed to trial may result in lengthy court proceedings, and so our forecast for 2021 just reflects the related increased legal expenses. Longer term, even narrow decisions that find coverage could result in some companies being unable to meet all of their policyholder obligations. Until these issues are conclusively resolved, the potential exists for this issue to have a significant impact on the industry.
So in recent years, the D&O and commercial auto lines have been particular pressure points for the PC industry. Given positive price momentum, are these commercial lines the ones that AM Best is concerned with the most for the year ahead?
Well, certainly they remain among the lines that we will be watching very closely next year. As vehicle traffic on the roads picks up, we expect to see loss frequency increase for commercial auto as well. And with economic activity and business activity returning to more normal levels, we would expect to see more lawsuits being filed. And so D&O is also likely to see higher loss frequency in 2021 than it did in 2020. However, we're concerned about all of the commercial casualty lines as we expect to see social inflation reemerging as a problem for the industry. People are going to be more likely to hire lawyers. They will be more willing to wait extended periods before claims are resolved. Third-party litigation financing is likely to become a factor again, and nuclear jury verdicts, where juries file large decisions in favor of insureds that are not just intended to compensate people, but to actually punish the corporations that the jury sees as liable for the injury, are likely to happen again. And with all of this, we would expect to see loss severity increasing in 2021 across the commercial casualty lines.
So AM Best recently revised its outlooks on title and E&S insurers back to stable. Did their 2020 performance come as a surprise? And are there other lines you think have the potential to perform better than expected in 2021?
So I think what I'd say is that we were more surprised by the performance of the economic conditions that support the title and E&S lines of business. People continued to qualify to refinance their mortgages or to purchase new homes. Businesses continue to expand into new ventures and business lines that require the special services of E&S companies. And so given that, the strong performance of those lines wasn't surprising, but we were certainly pleased that they performed so well, and we expect them to do so again in 2021. In terms of what line has the potential to be an upside surprise, I would say at this point, probably workers' compensation is the most likely. As people are going back to work and as workers are returning to their offices, we anticipate that we're going to see an increase in loss frequency. Also, pricing in workers' compensation and loss costs are likely to remain under some pressure because the recent performance of the line has been so good. It'll take a couple of years for higher loss experience, should that occur, to actually filter through into the loss costs. So while we're expecting that the performance of the workers' comp line is going to deteriorate next year, there's several factors that could, if they turn out more favorably than expected, could actually drive better performance than we've forecast.
Personal lines insurers in particular gave back a lot of premiums to policyholders in 2020. Is there a problematic impact on insurers, or do you see that as largely offsetting other factors? How are you looking at personal lines in the coming year?
In the second quarter of 2020, personal lines carriers gave back nearly $8 billion in premium refunds to customers to reflect less miles being driven due to COVID. Insurers were given latitude as to how they could record these refunds. Of the nearly $8 billion, $3.5 billion were recorded as a reduction in premium, $1.2 billion was recorded as an underwriting expense, and over $3 billion was recorded as a policyholder dividend. So while each of these methods impacted underwriting results in 2020, we do not view it as problematic. Even with these impacts, we're estimating a 4.4-point drop in the combined ratio for private passenger auto. This clearly demonstrates how large a drop in frequency was experienced in this line. Looking forward, we do not expect additional refunds of this magnitude, if any. While there continues to be less cars on the road than normal, we are already seeing frequency patterns starting to tick up again, and we have factored that into our projections for 2021. We are estimating a 98 combined ratio for personal auto, which is more in line with what we expected for 2019, but still reporting an underwriting gain. In terms of the overall personal lines, inclusive of both personal auto and homeowners, we do expect modest erosion in underwriting performance in 2021, despite our estimate of a reduction in cat losses from its high in 2020. This projection is largely driven by personal auto, with our expectations for increased frequency and ongoing severity trends related to medical costs and pricey repairs. Homeowners will continue to push rate to match risk and will need to factor in higher reinsurance costs. However, despite the modest projected erosion, 2021 is expected to produce underwriting gains for personal lines overall, and capital levels are expected to remain strong.
Michelle and Jennifer, thank you for speaking with us today.
Thank you, Meg.
Thanks for having me, Meg.
We've been speaking with Michelle Baurkot and Jennifer Marshall, directors at AM Best. To view the full report, visit ambest.com. For AM Best TV, I'm Meg Green.